Perfect. So my slides are visible to you.
Yes, sir.
Can you? Okay. Thank you. Perfect. I will. Yeah. Great. So I think it's visible on the first slide. Perfect. So let's talk about funding today. Majorly, we'll talk about angel. So let's understand why funding is important and how it's a very big topic among startups. The major reason is we all need money to do something, but at the same time, a lot of startups might go towards funding bit early. Some startups might go towards funding bit late. So let's understand two things today: how you can get funding and when you should get funding. So are you investment ready? That's the target. Let's do one thing. Let's come to these slides at the end of the topic about SPTBA and incubation. Let's move to the main topic today directly. We'll come to these slides later on. Yeah. So let's talk about funding. So there are like 4 to 5 fundamental questions we'll answer today. Why funding is important? Is funding given too much value in Indian ecosystem? To go for funding or not to go for funding? What are the funding opportunities? And to-do list before you go for any funding. So let's figure out all these 5 questions to answer today. So why is funding important? That was our first question, right? So why is funding important? So basically, if you are in a startup, so you'll understand a lot of resources we need to succeed. Okay, so let's divide these resources into few different categories. Well, first is human resource, second is tech resource, and third is physical resource. So when we talk about human resource, early stage when we are very new, it's mostly fulfilled by founders. There could be one, two, three, four founders. So they do everything. Bit here and there, work gets deeper. They try to find interns from the same college if they're a student or some other colleges if they have some connections there, and figure it out few interns who can support them. Another resource could be a friends and family support. So let's say someone in my family is a CA, so they'll support me for some time. A friend of mine is a good marketeer. A friend of mine is a good web developer, so they'll help me here and there. So to develop marketing strategy, probably to do initial some marketing, they'll support you. Your brother or sister might be there with some kind of skill set. So these are your human resources which you need after your interns and next stage. Once you grow further, now you can't deal with short-term interns or part-time family support or friend support. Now what you need is you need full-time team. So what you do, you hire people. This is your human resource, how it works and how you should move ahead. Similarly, at tech resources, a lot of startups today are tech-based startups. So what you do is you go to tech resources. The tech resources could be your internet, tech resource could be a hardware, tech resource could be a software, tech resource could be a lab, could any gadget. So a lot of these resources are required. Again, there are two ways to get it. A lot of incubators today have tech resources. A lot of accelerators have tech resources. Colleges, institutes may have tech resources for you, and different organizations may have tech resources. So these resources are mostly free if you are incubated or you're part of the college or a part of an organization where you are developing a startup. So you receive these resources for free. Even AWS credits for some limit is free. So software also some software are free. So you get those resources. Once you exhaust them or you grew further, you need more professional resources. Then you go for paid resources. Then comes your physical resource. Again, it could be free and paid resources. Physical resource free could be you are sitting in a college campus working it out, or working from your garage, from your home. These are free resources. Paid resources again could be, co-working space, incubator fees, whatever you want to hire or wherever you want to work from. So this is how your funding or your resources are required. Now, in each of these category, human resource, tech, or physical, understand that first I have talked about free resources. That means if you can maintain, if you can grow your startup at any stage by these resources, that means right now you don't need funding, or probably you're not at that stage that you can hire people and you don't have money to do that. However, if you see the last resource at every place, they are paid. Hired team members, uh, tech resources which you buy, co-working space, office infra which you take. So all these are paid resources. So once you are reached at these stages and you need these resources, that means now the funding is become important for you. So from resource point of view, understand when funding is important. If you are needing team hire because you want to grow faster, you need more salespeople. That means you need funding right now. Otherwise, how will you hire them? You are a tech startup growing, you need 1 lakh worth US dollars, AWS. That means you need funding because 20,000 they give free to any startup at incubator, but afterwards you have to buy. That means you need funding right now. That means you're growing faster right now. Similarly, physical resources. So understand from the resource point of view, when do you need funding? Now, is funding given too much value in it in Indian ecosystem? So let's discuss this in detail because a lot of startups today believe that success of a startup is receiving funding, which is a very wrong way to interpret because success of a startup is not getting funding. It's about solving the problem you wanted to solve. A lot of startups lose the enthusiasm the moment they receive funding. Founders take an exit because that's what they wanted to do, and startup might fail. Another story could be they're so much focused on funding that they are losing the core value of a startup and thereby not even getting funding also because they are not able to do what they wanted to do. So understanding all these situations, we realize funding though is important. However, because of the media, because of the news, because of the way we calculate success in India, funding might be given too much value sometimes. So you have to understand, you have to downplay the role of funding, at least in initial stage of your startup. So let's go point, from the early stage to the maturing stage. So at an early stage or initial stage, key to success of a startup is, do you have a good idea? So it's a key to success because no startup can be born without an idea. You can't have an idea or startup without an idea. So first, understand the idea. Do you have a good core idea? Are you working on it? Are you ensuring that it's feasible, viable, it's marketable, it's sellable to both your customers and your team because team can only work on an idea if they want or they understand the idea, right? Second is execution. So idea is okay, but just an idea doesn't work, right? It needs to be executed. So any good idea is only an idea. That's it. Nothing more than that. If it's not executed, it's not seen on the in the world. If it doesn't see the day light, night light, it's everything. So second important success key is in a execution startup in a way it has to be so that the idea which was given, the idea which germinated in the founder's brain, it gets executed in a similar way. It gets implemented in a similar way. Next is team. So you can execute an idea, but how do you execute an idea? So we had idea, then we talked about execution. So now execute an idea. What you need team members. So even before you go for funding, understand what kind of team are you working with? What are your team members? Team size? Can I have a lean team before I get a funding? Lean team means let less, like less procrastinating, more work, more discussions, more ideas, better ways to execute. So understand your team, understand your strength, understand strength of your other team members, see if they're reciprocating, if they're complementing each other, so that if you need 10 skills, everyone has few skills and then you have the 10 skills. Or the other way could be if a startup has two founders and both have same kind of skills, then it's a big problem because there will be few skills they don't know and they don't know how to act around it. So ensure that you have good team at the same time. So once you have all these in place, then comes your funding part. So don't go for funding at idea. Every day we receive startups coming to us with an idea saying, sir, this is an idea, best idea, we need funding. I said, execution plan, abhi nahi bana, we need funding for that team. We don't have team because we need funding to hire a team. And I told you before, how can you get team even before funding, free resources or cheap resources? I won't say free, but like inexpensive resources, I would say. So understand all these keys to a success of a startup, and then understand when the funding is required. Don't go for funding when you're building an idea. Don't go for funding when you're planning an execution. Don't go for funding when you're just understanding your team. Have these in place at least, and then probably you are good to go for funding, and the startup success key becomes, funding becomes, because a lot of times you have team, execution, idea, everything, but to grow faster you need funding, and that's where the value comes. Understand that value of a funding, it is important, but at the right stage. So are you ready? Big challenge, big question to a lot of people. A lot of startups are never able to answer these questions, so I have put like few questions here. We'll discuss all these questions in the next slide. So few very simple question is, how much fund should I raise? A lot of startups say, okay, someone is giving maximum 1 crore, let's ask for 1 crore. I have no idea how much I need. Once I ask them, afterwards we'll decide, how much I need, I'll work it out, but let's ask for 1 crore right away. What happens? It's just a number I have to put in the PPT. If your numbers are there and you're not prepared to answer those numbers, investors won't take it lightly, will take it seriously, and you will just be another startup who is rejected. So understand how much fund you need. It's very important to know how much you need, because that means you know how much to spend. So two important questions answered in a simple way. Understand, then move to the next question. When should I raise funds? So I need funding, but when do I need funding? Like what the stage? At what stage I should not raise the funding? At the same time, it's important. Relevant source of funding. So what are the good sources of funding I'll need right now, or I can capture? How much equity should I give? A lot of incubatees rather come to me and say, Chandrabhan, how much equity should we give? Like 2%, 5%, 10%. We don't know how to do that. So you should know. You can't go blunt and go to your investor say 15%. They might be ready to give you the funding only for 5, but you are giving them 15. Or vice versa. They want 15 and you're only giving 5 because you don't know how much to give. So understand the value of your startup. That's what the next question is: how to value my startup. you know Afterwards, how to connect to the right investors, and what should be the right instrument of funding. So these are very important questions. If you don't have answer to these questions, I'm not sure you are ready to go for funding right now, because all of these could be a very strong reason for your startup to get rejected. So don't give investors a reason to get rejected. And mind you, these reasons are only around funding reasons. I'm not talking about your startup being a good startup, bad startup, or your idea being good or bad, team good or bad. I'm assuming everything is on right plate, right pace, right place. You are moving to the funding, and that's where you are asking these questions. So first three, team, idea, execution, you have sorted it out. Then you should go to these questions. So let's talk about like few funding options, how it happens. So there are, I have made this table. So there are different stages of a startup. We'll discuss them: ideation, POC, MVP, launch, early traction, growth. Then there are different funding ways: pre-seed, seed, pre-series, series, IPO. So you have to understand what kind of funding you should raise at what stage. So when an ideation stage, generally you raise pre-seed. We'll discuss those options later on. So pre-seed is a very small amount of money: 5 lakh, 10 lakh, 15 lakh, 20 lakh. That amount of money to help you sustain at the initial stage. If you are at the ending of the ideation, or a proof of concept is ready, MVP is ready, you're about to launch, and all these three stages, you can go for a seed funding. Seed funding is basically the angels where they invest. This is your sweet spot which you want to understand today. Angels, what are angel investment? This is what they do. They go for a seed funding, pre-seed also sometimes, but seed majorly, where they will give you small amount of money between 5 lakh to 1 crore, 2 crore, depending on what kind of startup you are. This is the range where they'll put seed funding into your startup. It's like a seed giving, before a tree is grown, you're putting seed. So that's where you should look for. Afterwards is pre-series. Pre-series is generally you have launched the startup, you are early traction or you're growing. That's where you go for pre-series. Then comes the series, which is at the growth. You have done traction, everything. You just want to grow. Most of your money will be spent only on growing. That's why you go for series round. A series, B series, C series. That's how it happens. And finally happens IPO. That's probably a no more a startup right now. That's where you can go for an IPO. Like Zomato went for an IPO recently. Paytm went for an IPO. So they are no more startups right now. So let's talk about funding opportunities. We discussed previously, like pre-series, seed, you get funding, but how to get these funding. So this is what we'll talk about. So funding opportunities is different ways you get funding. How, that's what we discussed. First easy way is bootstrap. That means using your own resources. Generally done at ideation stage. It can go till POC or MVP. It's generally a pre-seed category. So what happens here is, you may have few savings, you use that money to bootstrap, or you have few skills, so you can use it and save money to hire someone. So like you are developing a website, so you do it by yourself. So you say, I have bootstrap, I have developed it by myself. So that's what you do initially. It could be 1 lakh rupee investment, 5 lakh rupee investment, 50,000 rupee investment. Initial stage just to at least do some ideation, some POC, some MVPs done. Next way of funding is friends and family. So friends and family is a good way to support you, and any investor will see if you have friends and family investment, because that shows that you are able to sell at least your idea to someone in the world. At least some family member is able to support you because you could sell the idea. They were convinced, they could at least something they liked about it, idea, your dedication, your efforts, and they say, okay, let me put some money. Because they're at a very early stage, you can shelf some equity, but it might not be, as per the valuation. You just can say, yeah, give me 5 lakh and take 1% equity in my startup. Don't contribute anything, but at least give me 5 lakh rupee or something. So this is how it happens. Again, it happens generally at ideation, POC, MVP stage, and it's known as pre-series category. Uh, Another way is crowdfunding. So crowdfunding is generally extended way of friends and family, where you tap out into the market, say, I need funding, but like someone is not giving you all money. So what you do is you ask small amount of money from different resources and crowdfund it so that you have some monetary benefit. Generally, it again done ideation, POC, MVP, or early launch. Uh, Crowdfunding could be pre-seed or seed, depending on what stage are you at the moment. A lot of hardware startups can, or product-based startup, not hardware, product-based startups actually have a good opportunity to crowdfunding. So let's say I'm making a kind of a T-shirt which does not really need ironing. Let's for an example, let's talk about it. And it's made of bamboo. Interesting idea, right? So bamboo se ban raha hai. So what you do is crowdfunding. You say you have designed some ideation you have done. So you tell the world that, hey, I am giving this, I'm building this T-shirt, and I need crowdfunding. So, and you can put, like, if you could give 1,000 rupee, you will be my early customer. I'll give you one T-shirt. If you give 2,000 rupee, I'll give you three T-shirts. If you give you 5,000 rupee, I'll give you like six T-shirts of your choice. So this way, what you are doing is you are getting two things. You are getting crowdfunding money. Also, you are getting your customers at the same time. First 1,000, 2,000 customers are ready for you because they have paid, they like the idea. And what you're doing is, let's say you're charging for 1,000 rupee for a T-shirt. For them, you are saying, because you are early stage, you are building in me, we'll give you 50% off. So like give 1,000 and you give two T-shirts. Give 4,000 and give 8 or 9 T-shirts. So they are getting 50% discount on the shirt. But why are they getting this discount? Because they are taking risk also, giving it the money when the product is not yet launched. So this is the way you can crowdsource or crowdfunding your money and get early customers all at the same time. Then comes angels. So this is where question came today is, so what does angels understand that? So angels are basically individual with high cash surplus, So HNI is जिनको बोलते हैं high net worth individuals. So someone who is making millions of rupee and they want to invest. So they don't want now to invest in equity. They don't want to invest in FD. They don't want to invest in bank. They don't want to invest in other institutions of funding of savings. So what they do is they invest in you, thinking this idea, if it grows, I can make 10x, 20x money out of it. So I want to invest. So what they do is generally angels, they invest in the 5 lakh, 10 lakh worth of amount and put it in a startup. And a lot of angel networks are across India who, because see, I as an angel might not be able to spend more than 5 lakh rupee in 1 year. That's my saving is, let's say. But you as an startup might need 20 lakh initially. So how will you get 20 lakh? You can't go to four angels at the same time. So what you do, you go to an angel network. They have people like me who pull in the money and say, okay, 5 lakh rupee, I'm giving it to you, like a portfolio management in stocks. Invest however you want to invest. So like me, 20 people will come, 5 lakh each, 1 crore is my money. Now this angel network will put that 1 crore into, let's say, 20 lakh in five startups in equal way. So if any one startup succeed, they'll give 20x, 10x returns. It will come back to me and the other angels at the same time. So there are two ways you can do this. Either you go to these angel networks. It's beneficial because the risk of rejection is low because you are not talking to four people, you're only talking to one person. Or you can go to individual angels if you know them, there's a personal relation, or they like the idea, they might put all money together. When do you go to angel? You can go from ideation to early launch. Categories again, pre-seed or seed. So till now, these are the four important resources you need as a startup at the stage you are right now. You don't need other investors at the moment because angels is good enough for you. 5 lakh, 10 lakh, 20 lakh is what you can do. You don't need VCs right now. But I'll just explain VCs and accelerator also because accelerator incubator could be again be a reason for you to source funding. So let's talk about these quickly also. So venture capital. So these are professional investment firm looking to invest in high growth potential startups. Now this is where you are. You are actually Series A onwards right now. When are they're investing? You are early launch or growth. So they will never invest in a ideation stage, POC stage startups because it's a very high risk and they're putting money like in 5 crore, 10 crore, 15 crore. And angels and people in ideation don't need this amount of money. So it's a very big mismatch. So they'll only go for early launch, growth stage startups, series A onwards categories funding, and very professional. They could be people who are banking sector or high network companies investing in startups. So generally, those are your venture capitalists. Then finally comes accelerators and incubators. So accelerator incubators directly don't invest money from their own pocket because they are not for profit. Basically what they are doing is helping you grow in terms of providing other resources apart from money. But money is also a resource at accelerator incubator. So generally early stage startups looking to get support through incubation and accelerator program should apply. You can apply at ideation, POC, MVP early launch, and it could be pre-seed or seed category kind of a funding for you. What these incubators and accelerators do is they have some kind of programs from the government or private institute which they have the money. So same similar to angel network, they have that money with them, call you for application, like an idea, and then distribute the money to those startups, taking some minimum equity at the same time. The difference between an angel and or an incubator would be angels would be more risk prone. That means they will take only those startups where they believe find funding के बाद में earning is almost 10x 20x. Incubators might not see that way because their growth is not to make money. They grow by making you supporting other initiatives. So they are more flexible. Even if they see a potential of 5x also, they will try to support the startup, because ultimately their aim is to support as many startups who are not able to get other resources from the angels or VCs or other funding opportunities. So that's where angels and incubators or kind of differentiate between angels. So between incubators and accelerator, the difference is incubator are at very early stage, accelerator are a bit later stage. So at ideation, no, accelerator will fund you, but incubator might. Early launch, accelerator will fund you, incubator might also, but accelerator will be more interested, because now you have done something at least and you want to accelerate right now. So with words only you can understand. Incubate, like support, lifeline. Accelerate, you have survived, now you want to grow. So accordingly, a startup should decide, do you want to go to an accelerator or incubator. Other funding opportunities could be banks. A lot of time you may not want to give your equity. So what you do is you go to a bank, say debt-based loan lena hai, and they'll give you. However, bank will only give you when you have launched the product. So they can't give it ideation stage, because banks, they work in a different way. So probably if you are launching the product, this is a good product, will grow. So आप बैंक से लोन ले सकते हो उसके लिए to support your business. Um, Similarly, government. So most of the incubators today get funding through government. So if you're seeking a government grant or funding, it's mostly through incubators or colleges. It could be ideation stage, POC, MVP, early launch. Category could be pre-seed, seed, or a grant also for hardware startups or hardware or any other startups. So that's how you can get support from the government also. So once you are ready to, go for funding, the other few things you need to understand when you go to an angel. So now let's talk about angel or VC. So angels basically. So you have identified when to go for funding, right? Like we were here, we answered all these questions. Now let's talk about, are you ready to go for the funding or not? Those were minimum requirement. This is acceptance level. So you have a team or not? Is it a full-time team? If you're the part-time, investors won't entertain you. You know your idea very well. Business is scalable. So there should not be any question where you say, I don't know the answer right now, or like unanswered question. So that's second stage. Clarity of thoughts, business plan, pitch deck ready. Do you have a proper pitch deck? Do you have a proper business plan? They are two different documents. You understand them, because business plan is more about internal, how the business will grow. Pitch deck is all about reaching out to investors, saying this is what we want to do and please give us funding. Know your stage. We have defined the stages, so you know which stage are you: ideation, POC, MVP, growth, scaling. You know that. Legal structure of the entity. Are you a private limited company? 99% of the investors won't talk to you if you're not a private limited, because if you are not private limited, they can't take equity on a startup. Very simple. So if they can't take equity, why will they give money to you? So please be private limited. Are you aware of your market, product potential? Very important. So you're aware of your idea, but are you aware of the other side also? Okay, what is the market around your idea? What is the product you are building? What is the potential of this product? Understand that side also. Clarity on which source to tap. Have a cap table. So basically, if your cap table means who are in a who owns equity in a company right now. So there's a cap table. So capital table basically. So let's say you have three founders, so all the cap table, A has 20%, B has 40%, C has 40%. Similarly, if your friends and family is given, so XYZ is 2%, ABC is 1.5%. So you have given a cap table clearly, and on afterwards you go to the investors, angel or VCs, and you understand what kind of funding do you need, and they will ask you, what kind of cap table do you have, because that is very important for to understand who will be their co-owner of the company at the same time. Clarity on which instrument. So are you going for CCPS, CCDs, optional convertible debentures, preference shares, optional preference shares, equity, debt, grant? Understand from all these clarity you have, what kind of funding do you want to take. You can't go for funding and then they say, how are you raising funds? And you say, sir, I have no idea. Whatever way you want to give it, we are okay with it. So understand, have the clarity of those instruments. See, today the topic is not to give you detailed instrument कैसे today is to understand what is important. I can share this PPT, and then based on these questions you can do more research to understand what are the instruments, and then you can decide which instrument you should know. But if you are a founder, you should know by default by this time what are the different kind of instrument, and this question will help you understand which instrument you should go for. Research your potential source. So don't go for any VC directly because उनका नाम बड़ा है. So source means wherever you get funding. Understand what kind of startups they do fund. What are the previous startups they have funded? Any success ratio of the startups? Do they also support in other ways apart from giving funding? If you do this research, I'll can guarantee you that out of 100 sources you have, 80, 90 you will reject by yourself. Carry. And how it will help you? It will help you in saving time. You don't have to pitch all of these people and then get rejected and you get demotivated. Saying, yeah, I went to 50 investors, all rejected me. It might be all were the wrong VC for you or investor for you. So understand your source. It's very important. Don't just randomly send PPT to everyone, and have a good legal support in the end. Lot of VCs, angels will give you a term sheet, which is like what are the terms for which you will be receiving money. They can be very difficult for you to understand. They could be very rigid also at the same time, which might not help you in future. So understand to have a good legal support. Pay some money to your legal, financial, or lawyer. Get them on board. Whatever in term sheet you receive from investors, give it to them. Share with them. Ask their feedback. Whatever they give it to you, the feedback, go to your investor and tell them that this is not acceptable. This is the feedback from my lawyer. So can we change it? And be open to all those changes also at the same time. So once you have all these in place, that means now your checklist is ready. You are more ready to go for an investor. You know which investor to go. You know what kind of money you will take. You know what could be your cap table later on. You know your market. You know your legal structure. You have a good lawyer team. So understanding that we have a good idea, we have a good execution, we have a good team, we have a good funding sources. I'm fund ready also. But after you answer them, then you are okay to go and raise funding in the market. So this is how you should go. It should never be about other way around, randomly sending PPTs to angels, not knowing what kind of cap table do you have, not able to answer their questions, not knowing the stage of your startups, not having a good PPT. All these will be a strong reason for a rejection. Please, if you get rejected, understand these could be one of the reason. And a lot of investors won't give a feedback, so don't say, hey, I did but they didn't give a feedback, they just rejected. It's a day, normal day for them. Think you are applying to 10 investors, but every investor get thousands of PPT every day. How comfortable they will be answering to everyone? It's very difficult. So take, wear their shoes and understand how they think about your idea, and it will help you a lot of time. So if you want to get less rejections, this is the to-do list. It's not that if you do this, you will get funding. I said before that, the idea, execution, everything should be in place. Then only this makes sense to you. So now let's come back to the starting point of the PPT, which was SPTBI, which is an incubation. So let's talk about a good source of funding which you have already in your campus, and you might not need to go out for funding right now. So let's give a brief about SPTBI. So SPTBI was incorporated in 2015 by SPIT College. More than 120 startups have been supported by SPTBI till now. Approximately 50,000 square feet area we have developed into AR/VR lab, IoT lab, digital studio, 25 dedicated rooms for startups, 5 meeting rooms, 1 conference room, 60 co-working space seating at the 8th floor of SPIT College, and a product development center, PDC lab, which is on the 3rd floor of SPIT. Till now, I think I'll skip these numbers, not relevant to you. Over 175 entrepreneurs supported in 115 startup. It's 120 right now. Over 650 jobs created. 12 student startups from SPIT supported. 4 faculty startups from SPIT, SPC supported, and 5 startups with people with disability supported till now. Now let's move to the programs at SPI TBI. So Basically, we have these 6 programs: SPTVA incubation program for startups which are probably mature, growing stage startups; SPTVA pre-incubation for ideation, POC, MVP stage startups; SPTVA virtual incubation for any startup not based out of Mumbai; SPTVA Prayas incubation for hardware-based startups who are developing the prototype, and we support under this program a support of up to 10 lakh rupees also given to each startup. Student startup program for SPIT, SPC, and other the few campus around Mumbai where we have a tie-up, where we support them by not charging fees for first few months. For the 3 months we don't charge fees. Then next 3 months we charge 50% fees, and afterwards full fees they have to pay like other pre-incubation startups. Faculty startup program similar to student startup program, a pre-incubation stage startup a program for 3 months free and 3 months 50% discount. So what happened in these programs? So why SPTBA? What's there? So generally at 1, 2, 3, 4, 5, 6 reasons why you should be at SPTBA. Office space, so a lot of physical infra we provide: co-working, meeting rooms, cafeteria, recreation area, plug and play, office space. That's all given to you. Apart from that, funding support, which we'll talk in later. As a form of financial support, SPTBI has approximately 20 crore fund right now, which it can use to support startups. We'll discuss it later how these 20 crores are with SPTBA. Mentoring and training, a lot of you will get mentoring training, which could be one-to-one mentoring, group mentoring, training programs, workshops at SPTBI. Access to talent pool. So not only our startup get SPIT students, but other institutes, interns also regularly whenever they need some support in terms of interns and talent pool. Believe a lot of you, if you are a fourth year student or third, will be knowing that you have 6 months internship period. So a lot of you will come to SPIT and SPTBI to get internship at our different startups. Events and activities, a lot of events and activities around entrepreneurship keep on happening at SPA TBA. And finally, is Tech Lab. So as I said, we have AR, VR, we have IoT Lab, we have Digital Studio, 3D printing, AR. All these labs are given free to our startups. All the equipments are giving free to them to use and get access to those. We're also developing a fabrication lab for hardware startups. So if you have been to SPC canteen, so other side of the canteen, right? On our side is the canteen, and on the other side, some construction is happening right now. So that's where we are developing our fab lab, which will be for the hardware startups. So now here we discuss funding support. So let's talk about 3 programs which we have through which we give funding. Which first is Nidhi Prayas. It is given to hardware prototype developing stage startups. We give maximum of 10 lakh rupee to each startup to develop their prototype. Till now, 10 startups have been supported this year, and every year we'll support 10 to 12 startups under this program. So if you're developing a hardware idea, something is being developed, you can apply for Nidhi Prayas program at SPTBI. Nidhi Triple S, this is again equity-based funding program of up to 25 lakh rupee of funding we give to each startup. 7 startups have been funded through this right now. Out of those, we do have good success stories like Ask Vidyalaya, DVDB Technologies through this. From the college, Kinsey and eTable, which was a student-run program startup, they received funding under this program also. So if you are needing a funding for 25 lakh or around 25 lakh in hardware, software, whatever category, you can apply through this program. Next is Startup India Seed Funding Program. So we have approximately 5 crore under this program, which we need to spend in the next 3 years, where we will give you a debt of maximum 20 lakh, grant of maximum 20 lakh, and simple debt-based funding for maximum 50 lakh rupee per startups. So debt base it's not equity; you pay back the money in terms of through EMIs later on. So this is how we support different startups. So SIFS has 5 crore, Nidhi Triple has 5 to 10 crore, and Nidhi Prayas has 5 crore, 20 crore the funding SPTBI has to support you people in different way, through grant, through equity, through debt, through through all these 3 ways you can raise funding through SPTBI currently. Having said that, it's a wrap up from my end. I think we kind of finish in 45 minutes, so we can have 10 to 15 minutes of question answers if you have questions and answers. Thank you so much. Yeah. Hello.
Hello. Hello.
Hello.
Can you hear me?
Yeah, yeah, I can hear you. Yo.
I just wanted to ask, how exactly, like if you're a student SPIT ka, how exactly do you approach the startups in SPTBI if you are looking for any short-term internship or something? Um,
Just talk to your college.
Okay.
I think TPO में बात करिए. TPO has a direct connect with us. They'll let us know that this is a student interested in internship, and then we will share it to the startups.
Okay. But is that like does the year not matter? Like if you're in first year, second year, third year?
Sorry.
Because I mean, uh, does the year like can you get it only in third or
No,
fourth?
it doesn't matter as long as see depends on the startup. You know what skill are you bringing on for the startup, and if they like that skill, why not?
Okay. Okay. Okay.
There's no criteria as such which year. Any other questions from any other person?
Sir, I had one doubt.
Yeah.
So, when we are pitching to the investors in order to raise money, most of the times it does not work out how we want. Like, if we are going for, say, 10 lakhs for 10% of equity, it does not work out as we want. As the startup, they bring us down, they give their own offer. So, at that very moment, how should we think about when the investors give their quotation?
Aditya, it's never, there will always be some negotiation from both the ends. See, you will always undervalue, overvalue a startup. You can never undervalue a startup. Investors
Correct.
will always undervalue a startup. So you have to come bridge the gap. So it's not like they offer you something and that's the final offer. There are few investors who clearly say that this is what we offer. Like 100x VC say it 1 crore 15%. If you apply to them, then you're by default agreeing to that money and that equity.
Correct.
Yeah, because they have a standard. You know that's what they have mentioned. They don't say they don't have a kind of a range. Ki 50 lakh to this is what we'll do. This is what they do. So if you are going to them, you agree to that by default. However, other most of the investors don't do that. So there's always a negotiation from both the ends in the end.
Okay. Thank you, sir.
It's not like whatever they said is the final offer. So you always, if you have seen Shark Tank, you'll see. It's always discussion happening. You'll say 5%, they'll say 2%, then something comes in between.
Correct, correct. Yeah. Thank you, sir.
Any further questions?
I don't think so, sir.
Okay, then thank you. Thank you for listening to me, and good luck to all of you. I hope some of you might be visiting SPTV and incubating here and maybe starting a startup. So good luck with that. Thank you. Bye bye.
Thank you so much, sir, for this wonderful session. IICSPIT thanks you for imparting
No,
all your knowledge.
no problem. We are same team. Chalo. Bye bye.
Bye and have a nice day, everyone.